Well, good morning, everyone. Um, Welcome to our Thursday morning trading room. Hang on here a moment. We'll get the screen share going on. Okay, so yesterday, of course, big FOMC report due out, and that kind of put the market in neutral for the most part. Once the report was released, it looks like it did send the market a little bit lower. We're left with a little bit of an opening gap. You can see after the European session especially put the market in a little bit of a tailspin. Trading leaving off up here yesterday around the 72 zone, and here we are opening somewhere around, where did we open? What was our opening tick? Well, anyways, we're opening somewhere around 72.30. Just a quick review of what you're looking at here, and then I'm going to get here to Michael's question because Michael's got a new owner question. So for those of you who are new in the trading room, what you're looking at here is the complete diversified trading system along with the Raptor. So well, first let me go over here. So the diversified trading system, we have the Hawk micro scalper here in the top left, Falcon swing trader top right, Eagle trend trader bottom left, and then of course you recognize the Raptor here on the bottom right. The markets I'm following on this particular monitor are the NASDAQ, or is the NASDAQ. I've also got the Russell and the E-mini S&P open on my other monitor. I can show you other markets as well, although I have to confess I haven't had time to talk to Kinetic about my data feed. I had a little interruption in data the other week, and when they hooked me up, I think I didn't get my NYMEX markets back, so I seem to be missing crude oil, but crude oil's been a bit of a dud lately anyway. But at any rate, this is what you're looking at. So Michael asks, can you go over what all of the symbols mean on the Raptor trading system, including the filter indicator and the clouds, and how they are shaded and the meanings and how it relates to the other three birds? Let me start with the last question, the last part of that question, because it's going to be a little bit easier, and then we'll get into the other three. The Raptor is essentially a hybrid of the other three trading systems. So the Raptor incorporates elements of the Hawk scalper, the Falcon swing trader, and the Eagle trend trader into one trading program. Why? Well, when we first launched the diversified trading system, we had quite a few people come to us and say, hey, Eric, we just don't have the screen real estate that you have. I'm trading off of a laptop, or I would really prefer to see everything onto one chart so I don't have to watch three charts. Those were actually the two biggest reasons. It seemed to be a big deal for a lot of people to monitor three charts, and a lot of people are trading off of laptops. And so we combined the most important elements of all three trading systems into one trading system, and that became the Raptor. Now, the Raptor has a few of its own unique attributes, and sometimes people think that the Raptor is missing signals that the other three are including, but it can happen, but it's very, very rare. And to be fair, sometimes the Raptor will actually signal ahead of the other three. So why would you have the other three and not just go with the Raptor? Well, they actually complement each other. I always struggled to find a good analogy. I always went with the hybrid car analogy because it was the best I could do. You know, if you're driving a Prius, is it a Corvette? No. Is it a Ford pickup? No. Does that mean the Prius won't get you from point A to point B? Yes, of course it will. Is it going to do it faster than a Corvette? Well, maybe not if you're driving along I-5, but if you're driving in city traffic, it'll probably do just as well as a Corvette. If you're driving a Prius, does that mean you can't move your bookcase from point A to point B? Well, of course you can. Can you do it as easily maybe as you can in a Ford pickup? Maybe not. So the DTS tools are a little bit more specialized. Each of the programming here for the Hawk, the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader are specifically designed to find opportunities within those trading environments. That's why sometimes you will see a signal develop here in the scalper and you won't get a trend signal. Well, because the trend signal parameters have not been met, whereas the scalping parameters may have been met, and so on. Are you at a disadvantage by trading the Raptor only? No, most definitely not. I know some DTS owners who only trade one of the three because they've become most comfortable with it. The Falcon Swing Trader seems to be the go-to for most traders, and for that reason, it is the primary engine behind the Raptor as well. You'll see that many of the Raptor signals and the Falcon signals will coincide. But that doesn't mean you're going to miss out on scalp signals or trend signals, because those are also reflected in the Raptor. Okay. So what do all the symbols mean? All three systems develop signals the same way. They develop signals first with the use of a warning dot. The warning dot will alert you to the possibility of a trade. The warning dot is just that. It is a warning that at least half of the signal parameters have been met. So this is your alert to pay attention to what's developing. Once a signal is complete, once all the signal parameters have been met, you will produce a triangle and a hash mark. And like I said, this is the same for all the markets or all the tools. All right, so first you get a warning dot alerting you to the possibility of a trade. Then once all the signal parameters are met, you get a triangle and a hash mark. This says that, okay, it's decision time. The hash mark, by the way, is an arbitrary suggested entry point. Arbitrary in the sense that computers require everything to be black and white. When we were doing the programming, I really, not being a programmer myself, I kept asking the programmers, well, can we take into account the fact that the market made a swing back here? And they would say, No. No, sorry, Eric, we can't do that. Well, they could, but it would just really, really bog down the programming, and it would be more than NinjaTrader could manage. But they said, no, we can give you a hash mark, but you have to tell us exactly where you want that hash mark to go. So the hash mark will always print one tick above, or in the case of a cell, one tick below the signal bar. So the signal bar is the one with the triangle, and it will also print a hash mark. Again, that is a suggested entry. You don't have to take it right at the hash mark. Sometimes, depending on what the market conditions are, you'll see me do what I refer to as a second push entry, where if I'm looking at my chart and I think, maybe this market's moving kind of sideways, and I'm producing a buy signal, maybe I'll see where the market reacts, because very often it will react within a bar or two after engaging the signal. So rather than take it right here and oh shoot, am I in the wrong thing again? Okay, rather than take it right here, yeah, doggone it, excuse me here a second. For some reason, I'm stuck here on the wrong market. Come on. There we go. So rather than take it right here, set up your trade like this, and perhaps still be within the sideways trading range, I can use a second push opportunity to only bring me in once the market momentum really starts to build. All right. So again, the hash mark is merely a suggested entry point. The filter, I know I don't pay that much attention to the filter, but the filter itself is the whole Eagle Trend Trader programmed here into the filter. The primary purpose of the filter is to show you market bias and when it may be changing. Let me show you how you can interpret that. It's essentially by the shift in momentum. So here we've had a very bearish block, and all of a sudden, in the midst of all this sideways trading, we produce a fairly decent sized bullish block. And then after that, we produce another bearish block, but it's not as big as the bullish block, is it? So this would suggest that perhaps the market momentum is beginning to shift. And you can see we're getting some bullishness come back, and it's approximately equal to what the bearish block was. So the market seemingly balanced at this point. You don't want to get micromanaging these kinds of things. You don't want to start, drawing some sort of measuring and saying, oh, well, okay, the red block definitely bigger than the blue block, so the seller's definitely still stronger. No, you don't want to be doing that. If it looks approximately equal, it's approximately equal. And it will tell you that the market is more or less balanced. Okay, and then here we come back with obviously a larger bearish block, kind of negating what the buyers have been doing. And so at this point, I'd be thinking, okay, the market is still bearish. We saw a little breakout lower here through some of these swing lows. If I develop a hard edge bounce, if I develop, say, like a number 3 signal now, if the market comes down and prints a number 3 signal, then I would be thinking the overall market trend is still down, therefore I will try to take that signal. What ends up happening, however, though, is the market starts to break up again. And so we get the blue block, we get the red block, which is, it looks a little bit smaller than the blue block. And now all of a sudden it's like, okay, the buyers have taken control over the sellers. So you can visually see how this bearish momentum started to fade and how the bullish momentum is starting to build. So now if we come across with a buy signal, it may open us up to the opportunity of a buy. All right, so that's how you use the filter. I know I don't pay a lot of attention to it, or I don't point it out as much as perhaps I should. It is not a deal breaker for me, and I know for some people it is, but if I have a sell signal on a blue block or a buy signal on a red block. No, it seems like most of these are all in sync. I can't find you one to show you. No. You're going to find that this sort of thing happens, though, especially with your hard edge bounce signals, that your filter is going to go out of sync, come back into sync. You're going to develop a hard edge bounce signal, and that's going to have a little bit more follow through. But that said, it's not usually a deal breaker, and you're going to get this most of the time with your counter trend signals if the block or the filter color is different than the signal color. The clouds. The Raptor, as you notice, has two clouds. The Eagle only has one. So with the Raptor, well, first let me go over the directionality of the clouds. So when your clouds, this is what we call the soft edge of the cloud, this little edge here. This bright edge or edges are what we call the hard edge of the trading cloud. When the cloud is stacked this way with the soft edge above the hard edge, we expect bullishness. We're looking for buy signals. When the soft edge is below the hard edge, we anticipate sell signals or selling opportunities. We expect the market to go down. People often ask me about signals off of the soft edge. And people often ask me about this ragged soft edge, the shaded one inside the cloud, the significance of those. I have not found any significance to those other than to point out directionality. If in your using of the Raptor you find something interesting about the soft edge, I would very much like to hear about it. But so far, I haven't discovered anything significant about the soft edge, except the fact that it points out market direction. Well, I shouldn't say I haven't found out any significant. There is one significant thing about the soft edge relative to the hard edge, and that's when it becomes very, very broad. And this will vary for different markets, so you're going to have to do a little bit of your homework if you're trading a market other than something like the mini Dow or the NASDAQ. It would be very easy to find out these figures for the Russell and the E-mini because they pretty much follow the other stock index markets as well. They all tend to move as a group. But when your band starts to get about 40 or 50 ticks broad, and we're talking ticks with the NASDAQ, remember there's 4 ticks for every point as with the E-mini. So when this band starts to get very, very broad, it opens itself up to a reversal. If you were plotting, say, a stochastics indicator or an RSI or Williams percent R or any of these other oscillating indicators, you would find that the market is very oversold at this point. Now, unlike a stochastic that happens to be oversold, stochastics can remain oversold for a long, long time. In fact, stochastics probably got oversold back here somewhere, just as the market was starting to trend lower. But a market on an oscillator can remain oversold for a long, long time. Here on the Raptor band, when it becomes very, very broad like this, it does open up the possibility of a reversal. And those are the times, that's one of the things I like to actually see with a number 2 signal, is a very, very drawn out trading band. It makes me think that a reversal is more likely. Now, a broad band does not mean the market has to reverse. It just means it's more likely. So you can see the band very broad here, came down, made a hard edge bounce, came up a little bit some more, and then finally started to retreat and normalize the band a little bit. Okay, and now just a quick review of the signals, and then we'll actually be out of opening range. I see the market has made a nice little run up here this morning. But just a review of the signals. Well, here, let me find you a nice one, a real pretty one. Where are you? There we go. Okay, your number 1 signal is your cloud crossover signal. The number 1 signal tries to alert you to a developing trend. All the signal prompts on the Raptor have 2 components to them. So the number 1 signal, the first component, is that the clouds change direction. So here we have bands, or the clouds, that are stacked in a bullish fashion. Now they become stacked in a bearish fashion, right? You see that? They've gone from bullish to bearish. So that's component number 1. The clouds have to change direction. Component number 2 for the number 1 signal to develop is that there has to be a pullback after the clouds change direction. So there's a little bit of a pullback, and then you'll print a number 1 signal. This is useful to know because I'm going to point out an early number 1 signal to you shortly. And sometimes you can actually get a little bit ahead of the curve. So here is a number 1 signal as well. The clouds change direction, so they go from a bearish, a very temporary bearish state, to a bullish one. There's a pullback, and then the market, doggone it, stop it, and then the market produces a buy signal. Here the band was out of sync, essentially trying to become bearish, comes back into sync, pullback, number 1 signal. All right, so there's your number 1 signal. Your number 2 signal is your counter trend signal. Before you can have a counter trend signal, you have to have something resembling a trend to go counter to. So that's component number 1. Component number 2 is you need to see a test of the extreme. In this case, the extreme is the high. A test of the extreme is simply the market showing you that it can no longer continue in the direction it has been going. In the case of an uptrend, it looks like that. In a downtrend, it looks like this. Many of you will recognize this as part of a head and shoulders formation. They're also known as M and W formations for obvious reasons. They're also known as 1, 2, 3 tops, 1, 2, 3 bottoms. Elliott wave traders like to call them ABCs. It doesn't matter what you call it. It's important what the market is showing you. It's showing you a retest of the current high or low, and then a failure to continue. If that happens and the market reverses and the trading parameters are met, the signal parameters are met, you will produce a number 2 signal. As I mentioned earlier, a number 2 signal is going to be most effective when your trading band starts to get rather broad. So you may want to do a quick little calculation, say, okay, we're at 72.40, the bottom, the high around 72.52, 53. That's what is it? That's 13 points. So that's what, 52 ticks. So yeah, okay, maybe a reversal is likely, and so you may choose to try to do that trade. I will tell you from experience that counter trend trades are a lower probability signal unless the conditions are just right. And very often we'll have greater success with a counter trend signal after what I call a 2-3-2 combination. So we get the counter trend signal, we get the hard edge bounce, which I'll show you next, and then we come back with yet another counter trend signal. These tend to actually have a little bit more reliability to them. And it's kind of like the market needs that second little kick in the pants to finally do that reversal signal. So try to be selective with your counter trend signals. You'll probably save yourself a bucket full of money. Your number 3 signal is your hard edge bounce signal. Your hard edge bounce signal is a continuation signal. So the 2 components for a continuation signal is, well, A, you have to have something resembling a trend to continue. And then B, you have to hit the hard edge and bounce. So that's what incorporates a number 3 signal. It's essentially buying a market on a pullback, or in the case of a downtrend, selling a market on a pullback. That's the essence of a number 3 signal. Sometimes you will see the market get very, very close to the hard edge. Let's see if I can find you an example. And actually not produce a signal. Okay, right here. So we're looking at this. It looks as though the market is in a trend, right? We come up here, we're only a couple of ticks shy of the hard edge. Visually, we've met the requirements of a hard edge bounce. I would still call this signal a number 3 signal, a hard edge bounce, even though it did not print as a number 3 signal. That one's kind of borderline. I would not consider this to be a hard edge bounce. It's far too far away. Hard edge bounces can occur off of either hard edge, either the faster one or the slower one. And like I said, they're just there to alert you to the possibility of a continuation. I can't find you another good example. But I'll leave it to you to scroll through your charts and find something. If you have any questions, you can always send me. You can either email direct from Ninja, or you can save it and then email it to me. If you email me a chart, please tell me what time and day you're looking at. It saves me a whole lot of time trying to find out where you were at, what you might have been seeing. If you're using a mouse with a roller on it, you can simply push down on the roller and it will give you all that information. This is what I would call an early number one signal, this one right here. You can see the clouds are changing direction, but they're not fully crossed yet. We have had a pullback, so we've met most of the trade requirements for a number one signal, except the clouds are not fully crossed. This is what I would call an early number one. This is, again, one of these signals that you're going to learn to recognize visually. And sometimes what it does is it allows you to get a little bit ahead of the curve. You get in while the market momentum is early, and then later you will still get a complete number one signal printing once the clouds fully cross and you get that pullback and the resumption of the trend. These other signals that you see printing, people often ask, why do I have so many signals if I'm only looking for the 1, the 2, and the 3? Well, like I said, sometimes visually you'll see an opportunity that will fall outside of the programming parameters. Remember, computers have to have everything specified. Everything has to be black and white. There is no gray area with the computer. So your own gray cells is are still a little bit more powerful than what's going on the computer. But these are what we call discretionary signals. So sometimes you're going to find yourself in a market and all of a sudden it just starts moving really, really quickly. You can tell a trend is developing and you're thinking, oh gosh, I missed out on that number 3 signal. Do I have to wait for another pullback before I get into the trade? No, you can look at one of these discretionary signals. The discretionary signal tells you that all the trading parameters have been met, but it does not qualify as one of our high probability signals. Therefore, you don't get a signal prompt. So you can still look at that discretionary signal and you can say, all right, maybe I'll hop in at that point and take advantage of the fact that the signal parameters have still been met. When you are looking at these signals, it is important not to ignore the left side of your chart. I can't tell you how many times people will send me an email and they'll say, you know, what's wrong with your system? This number 1 signal didn't work out. Or this number 1 signal didn't work out. Well, no, it didn't, because look at what you're trading in. This should be screaming to you, sideways market. Use caution. You got lots of yellow bars. You got no follow through. You got loads of background highlights. You got a filter that can't make up its mind. Don't trade this. Or if you are going to trade it, either use a very, very wide stop so you don't get stopped out prematurely, or reduce your risk exposure. So if you do catch yourself on the wrong side of the market, it doesn't cost you as much. Your best course of action when the market is like this is to let it emerge and then look for a follow-up signal. That's always been my way of thinking. Great, John, you made it. Fantastic. John's asking, what is your data feed? I'm using the kinetic data feed. And like I said, I had a little issue last week, and I think when they set me up again, they forgot to include some of the markets. Mark, nice to see you back. Yeah, Mark says, nice example of a hard edge bounce on the Eagle this morning. Textbook right here. Right into the hard edge, comes out, nice little red bar buy. That is a high probability signal on the Eagle Trend Trader. Great follow through. Trade forecaster saying we are in trend mode. Looks like for the remainder of the morning, or the better part of the morning. Okay, Dan's asking, the signal on the Falcon at 72.70, is that a high probability signal? Well, I think you're referring to this one right here, and I would say no. Okay, now in hindsight, you can see that it did go up, hit its profit target, but when it's developing real time, the trend line is starting to change color. Your filter is already out of sync, so it's not going to qualify as a late filter entry. It's not even going to do it as an early trend change signal. I don't know. Did it even intersect a trend line? Oh, okay. Well, it was a trend line. Hit a trend line and bounced. But looking at this one real time, honestly, I probably would have passed. And the reason I say that is it's very likely I would have had another signal on one of my other tools. Here on the Hawk, we have a 4-arrow consolidation. Yes, I know it's only 3 arrows, but it is still a 4-arrow consolidation. It's essentially a pullback. The Eagle just had a follow-up signal. Let's see if the Raptor gave us anything. That's around 704. Well, the Raptor got you in a little bit earlier here with the number 3 signal. And then again, here's a situation where, okay, we're only a tick or two off of the hard edge. You may have considered that to be, visually anyways, another number 3 signal. The trading tools are very good. They are not going to catch every single signal, however. Sometimes the market will drift a couple of ticks too low, and that will be enough to change the trend line color and spoil your signal. Here, on the other hand, we just produced a high probability signal with the late filter entry signal. So in this case, the filter goes out of sync, comes back into sync. The trend line does not change color. So that would have been a higher probability signal. And now it becomes a matter of logistics. How can I set up this trade so I don't get stopped out before I hit a profit target? To that end, and everybody will have their own way of doing this, but to that end, I usually go 2 swings back. So, and I don't micromanage. I don't say, that's swing 1, this is swing 2. No. I'll go, this is swing 1, this is swing 2, and there's my trade. Now, if I can afford the risk, I take the trade. That's really what it amounts to. If I were running my automatic break even, it looks like I would have engaged the auto break even and been tagged out at this point. But here, just for demonstration's sake, and don't take this trade because it looks like the market's kind of running out of steam. But for demonstration's sake, we'll see if they rally up here, it will give me the same entry as what I would have had right here. And I'll show you how I might have managed the trade. essentially what I'm doing is I would just be waiting for the market to give me another swing so I can maintain my 2 swings back type of strategy. Yeah, okay, they're not going to do it. Okay, so let's say the market started to turn at this point. I know there's buying going on right here, right? So if the market turns now, even though it got a little bit lower, this, by the way, is why you don't want to place your stop so tight to the last swing, because look what happens. The market comes down, breaks the last swing low by a tick or two, stops you out, and then probably starts to head higher or may head higher. At least by keeping your stop 2 swings back, while it may be possible for the market to violate the first swing point, it is extremely unlikely that it will be able to violate the second swing point as well. Not without giving you some opportunity to adjust your stops. So while this looks very lopsided to most people, because everybody's heard, oh, well, you have to have at least a 2-to-1 or 3-to-1 reward to risk ratio before you take a trade. That works really good on paper. It does not work so good in real life. And I'll show you how professional traders use 2-to-1 and 3-to-1 reward to risk ratios, but not in the way that you think. People who spout 2-to-1 and 3-to-1 reward risk ratios, a lot of times I wonder whether they actually trade. Because, like I said, it works great on paper. As a paper exercise, it works fantastic. As a real money exercise, not so good. For instance, here, if my profit target is $100, what's my risk? $30 to $50. Well, guess what? I just got hammered for my $30 to $50 loss. And what if the market goes up here and hits $100? What does that tell you? It tells you your stops are too tight. So you can see there's some buying going on here. Now the market is really, really slow. So at this point, I might choose to roll my stops a little bit. But you know what? When you're using your trade manager and you know your risk is capped at 2%, and worst case scenario, if the market comes screaming down here, it's not screaming anywhere today, by the way, but occasionally the market will start to move very, very quickly and not give you a chance to do anything with your stop. At least you can take solace in the fact that you did not lose more than you can afford. Trading is a lot like the kids' game of tag. The objective is not to get tagged. This is not a loss unless it gets tagged. This is not a loss unless it gets tagged. And the further I can keep my stop from the market, oh, okay, that seems to be my limit. The further I can keep the stop from my market, the greater the probability that the market will find my profit target before it finds my stop loss. Somewhere in here, in this whole area, the market will make another push higher. How can I say that? Well, first off, before there's a reversal, there's almost certain to be a test of the extreme. Secondly, I know there's buying here. We stopped out a bunch of sellers back here when the market traded through. The buying was supported at this point. Therefore, it's going to try to be supported again. There will be traders who look for a buying opportunity. Traders that think the market is bullish now will be looking for any excuse to buy it. Okay, I've had a couple of bullish bars. At this point, I would now take my stop and I would start to roll it up. If the market starts to get a little flinchy here again, I'm going to keep an eye on it. And if it gives me one more bullish push, then I'll at least bring my trade to break even. But even if I get stopped at this point, look, I started with about $400, and that was 2% of my capital. If I get stopped here, I'm going to get tagged for about $100. That's like 0.75% of my trading capital. You will not go broke trading 0.75 or losing 0.75% of your trading capital. Okay, see this bullish push? Oh, I was going to say that would have been a good time to try to get your stops to break even. We'll see if they give me one more bullish bar. Okay, there we go. So now maybe I'll bring my stops up here. And now, given that the market reacted here before, maybe I'll put the squeeze on it. I'll take the trade to break even, or maybe even just below that current bar, maybe I'll stop out with 20 or 30 bucks, pay my commissions and fees, or maybe they'll go up and hit my profit objective. All right, well, it looks like they're going to tag me out here. Okay, so I would have got a break-even tag out, but I gave the trade every opportunity, right? I had a high probability signal. I had a high probability signal that I chose to take advantage of. And then the market just kind of went a little bit sideways. Had I managed it with a looser stop still, okay, there you go. Had I managed it with a looser stop still, I would have hit my profit objective. But I would be okay with the break-even stop out. To my way of thinking, I did everything correctly. The market just wasn't ready to respond just yet. But you can see, the more liberal you can be with your stop, the more room you can give the market, the more likely you are to profit. Trading is kind of a paradox. You know, you shouldn't be afraid to lose money if you want to make money. If you've ever been to Las Vegas, you know you're not going to win at the craps table or blackjack or at the slot machine if you're not prepared to put some money into the game. All right, so I hope that answered Michael's question. It was a good chance to overview everything on the Rafter and the other tools. So save this date, August 2nd, and you can review this video. Yeah, Frank says, yeah, but in Vegas, at least I get free drinks. Yes, that's true too. Hey, way to go, Mark. Mark says, great to be back. 37 days and I'm retired from the Army Reserve. Yay. Good for you. Did they make you general before you go? General Mark? All right. So what we're looking at now, we've got a market that's in an obvious uptrend. And I think I think I may have waited a little bit too long. This looks very much like it's going to be the move of the day. That's all right. Let's see here. Let's take a look at the daily. What's going on the daily? Whoa, what a bullish day. Started with a gap down here, just a full-on bullish bar here this morning. Volume seems to be a little bit light so far. That'll be significant, by the way. If we have a strong bar like this and the volume does not increase before the close, it will make me wonder, why is the market rallying? What's causing the market to rally if nobody is buying it? Is it just a lack of trading? Mark says not so lucky, just Master Sergeant. Well, that's pretty good. All right. So now we're kind of on hold. We did get some opportunities here. Let me review this number 2 signal that printed back here. This is a good example why you want to be selective with your counter trend signals and why that 232 setup tends to be a little bit more reliable. Obviously, a very, very strong trend here this morning, right? Right out of the open, the market takes off like a shot, and it keeps rallying, and now you get the counter trend signals. Counter trend signals are always going to look so tempting. And if I was a conspiracy nut, I would probably say the market does it on purpose. It doesn't really. It's just that traders are trying to sell. They're trying to get ahead of 7,300. They're trying to short it early, thinking, oh, the market's going to react. And it looks very promising. We've got a nice broad band. We've got a trend to go counter to. But what happens? Well, the trend just continues higher. This, by the way, this signal right here, note the bar just came a tick short of the hard edge. I would still consider this a number 3 signal. So again, this is why you want to learn to identify the signals independent of the prompts, because you'll be able to take advantage of signals like that as well. Okay, now we're kind of in hold mode. Got a big rally, and now we may actually produce another number 2 signal. If you're using the Geiger counter as well, anytime you get a questionable signal like a number 2 signal here, you would like to see this needle well into the red zone. Even if that needle was turning red, that would give you a little bit more confidence in that number 2 signal. So long as it was neutral or even green, it would be a little bit more questionable. Even on these discretionary signals, let's take a look at this discretionary signal. So the Geiger counters turn green. We have a follow-up signal. We have a second push entry opportunity. I can't risk it 2 swings back, but I can risk it about the better part of the way here to the trading band, the hard edge of the trading band. And, you know, not one of our high probability opportunities, but we have a market that seems to be trending well. We have a buy signal. We had a Geiger counter that was full on green. And so hopefully, maybe, what time is it? Oh gosh, it's an hour into the session. This is characteristically is when a lot of times the market will reverse against the trend if there has been one. Okay, so now the Geiger counter actually getting a little bit red. Maybe I'll be a little bit more aggressive with my stop and bring it in. They're thinking about it. You can see they're playing the secondary resistance line almost to the number, 72.98 half. It's essentially a reaction to 7,300. See if they can get above there again or not. John asks, I'm using an Apple computer under Parallels. Parallels only supports one external monitor. Is one monitor enough for the Raptor 2.0? Yes, absolutely. You may have missed it earlier. I mentioned that was part of the impetus for developing the Raptor, actually, is we had a few people trading off of laptops and they said, hey, Eric, I just don't have the screen real estate to run multiple monitors. And so we ended up developing the Raptor. They're thinking about it. Yeah, Frank says I use a Mac and run two monitors. I think, you know, if you go to your computer store, you can get splitters that allow you to run multiple monitors off of a single port. Again, I'm not the tech guy. But I know I had to put a splitter on one of my ports to get my third monitor going. Yeah, great point here from Mickey. Mickey says you need to know what graphics your card will support. Yeah, that's one thing I did learn is your graphics card is going to determine how many monitors you can run. Obviously, you want the fastest graphics card you can afford. Yeah, Scott. Scott said, did he say he's running a Mac? Yep. Frank says he's running a Mac as well. There's quite a few Mac owners who are running our software now. Scott's asking what tools do they use or is he using to run Windows clean, Parallels or what? I think John said he's using Parallels. All right, well, we're really stuck here on the resistance zone, and I think that's partly due, like I said, about an hour into the session, if there's been a dominant trend, it's not uncommon to see the market try to reverse on that trend. And I'm going to get tagged here in a second, I think. And there you go. So this is what I would refer to as a good loss. Yes, I lost money on the trade. I had my reasons for taking the trade. It just didn't work out. Just didn't work out as planned. But like I said, those kinds of losses are not the kind of losses that are gonna sink you. It's the trades where you're chasing the market around, where you're frankly over trading and risking too much money. Those are the two things. If anything is going to ruin your account, that's what's going to do it to you. All right, just back here to the tech questions for a moment, because I know it'll drive Scott crazy not knowing. Frank says he uses the Thunderbolt port for one and HDMI for the other. And John says he's using Windows 10 under Parallels. Ew, Windows 10. I won't get onto that rant right now. Not a fan of Windows 10. Sorry. I'm showing my age. Oh, Scott says I had no luck with Parallels. Good for them. All right, getting a little bit of a turnover now. The Hawk already producing a first micro macro cross. It looks like the Falcon also going to produce a trend change. The Eagle and the Raptor both still bullish here. However, we may be getting that 2-3-2 type setup that I mentioned earlier. So here we have the 2, the counter trend. It did not print. Notice we got the shading. Oh, sorry, it did print. There's the prompt. Just didn't see it, sorry. So we got the 2. Now we're getting a hard edge bounce, which may or may not produce a signal. And in which case we maybe come back with a another number 2. Note the Geiger counter just kind of all over the map. Oh no, there we go. We did get a number 3. So here we got another opportunity to buy. And again, I'd probably set it up like this rather than take it right on the hash mark. Maybe get it on a break up here or wait for a second push opportunity. I opened a can of worms here. Mark says, I loathe Windows 10. Oh, ain't that the truth? What were they thinking? Oh, I know what they were thinking. They were thinking everybody's 20 years old and has nothing better to do than learn how to reuse a computer. Okay, so here's 2, 3, and 2. Note the shading, but the signal did not engage, so we have the parameters there. We're starting to get a little bit sideways, folks. You know, if you're looking for a good trade to take, I'm not so sure this is it. Yeah, I've got Windows 10 on my laptop, and the first couple of months I was using it, I seriously considered dumping it and putting Linux on my brand new computer. Usually I just put Linux on my oldest computer just so I can horse around with it a little bit. So here, this signal, again, another number 3 signal. Looks like we may have missed the hard edge, maybe by a tick. It's hard to see with that hash mark there. Okay, we're definitely getting a 232 type opportunity. So what you could do is you could even engage your OCO order. So with your OCO order, you're going to right click, or you're going to click the OCO to activate it. Then you're going to right click and select your order, your buy order and your sell order. Now these orders are live as soon as you put them on your chart. So normally what I do is I place them away and then pull them into where I want them to be. But I may leave that one alone for now. Oh, I got Mark all riled up now. Mark says, whatever happened to if it ain't broke, don't fix it. Windows 7 was great, and then they screwed up a good thing. I agree. I agree entirely. And while I'm agreeing, I should probably get my stop strategy working. I think Windows topped out at Windows 7. Windows 8, I think, was a farce. Windows 10 is a poor compromise between Windows 7 and Windows 8. Just from a user point of view, I know there's cool features on Windows 10. The thing I dislike most about Windows 10 is that you cannot turn off the automatic updates. And you have to constantly go into your computer to turn off the spy settings. I'm sorry, call me old-fashioned, but if I'm paying for the machine, I want it to do what I want it to do. If you give me a machine, then that's fine. You can spy on me all you want. I don't care. But so long as the money's coming out of my wallet. John asked, should I go back to Windows 7? Yeah, if you have the option. I think Windows 7, well, it's up to you, John. Windows 10 certainly is stable enough. I prefer Windows 7 because, like I said, I can turn off all the software updates. By the way, folks, those software updates, all those security updates, and I'm using air quotes when I say that in my funny voice, security updates, a lot of times they're just ways for Apple and Windows and to put tracking software on your computer and advertisements. If you haven't noticed all those annoying pop-ups asking you to upgrade to the newest version of this, that, and the other thing, that's what you got with the last security update. All right, so this last number 3 signal, this OCO type opportunity that I was pointing out, worked out not too badly. A little bit of a wash really from the previous trade. Frank's asking, is Windows 10 Professional the same? As far as I know, it is. I think the Professional just allows you, excuse me, a few different things in terms of licensing. but don't quote me. I don't know. Yeah, Mark says, rolling my laptop back to an earlier date as we speak due to the latest update causing major conflicts. And that is the primary reason I always disabled updates. Adam, who used to do tech support for computer companies, told me early on, he says, Eric, if your computer is working now, it will continue to work in the future. Turn off the updates. And that was the best piece of advice I ever got. And yeah, Mark's adding even a few more exclamation points now. He says, totally with you, buddy. Up. Yep, the force updates are the worst. And what I particularly hate is when I'm working on something and the computer prompts me for an update. Like, no. John says, my NASDAQ is set up for 4 ticks and my chart is different from yours. Yes, it would be. So what you need to do is right-click on your chart, go to your data series. That's going to control your brick size. And the default brick size would be 8 ticks. This is going to be the default for the majority of the markets that you're interested in. If you're looking at an instrument that's trading over $10 a tick, such as the E-mini S&P, you may want to go to the alternate brick size, which is the 446. So here's the E-mini S&P. If we ran this on a regular 8-tick brick, it would become very congested. You would see, daybreak lines like this, and you just would not have any opportunities to day trade. Now, that's fine if you're going to take the signal and sit on it for a day or two, but if you're day trading, it's not going to work out very well. So we're going to go with the 446 settings. This is your alternate setting. You can use this setting on some markets that are $10 a tick as well, especially if they're a little bit slower. Some of the currencies, sometimes I'll put it on the euro dollar. Certainly if I'm looking at the Canadian dollar or the Australian dollar, I need to go to the slower settings, or pardon me, the faster settings. And like I said, it's obvious if you need to do it. You'll open up your chart and it will look like this. And these being your daybreak lines, right? You can't trade with only one signal a day. So if you open up your chart and it looks like you're not getting enough trading opportunities, go to your 446 settings. So you're going to change your brick size. Again, you go to your data series. You're going to change that to 4 ticks. Then you will go to your indicator settings. And you can find your Raptor 2.0. And then scroll down here to where the clouds are. And you're going to make the slow cloud 6 ticks. You're going to make the fast cloud 4 ticks. And you're going to make the hawk brick size 4 ticks. 4, 4, 6. And I like to tell people the easy way to remember that is the telephone prefix for Moose Jaw, Saskatchewan. So there you go. Once you've done that, you can apply your settings and you will get a normal looking Raptor. And you can see we've got a few more opportunities here to choose from. Tom's asking or commenting, really wish Ninja would release it on the iOS platform. You should shoot them an email. I don't know if you, well, I'm assuming you're probably trading off of a, or looking to trade off of a tablet or something. I don't know if I'd want to trade off of a cell phone. I kind of draw the line there, I think. Yeah, Mickey asked, the data series on the E-mini is 4 ticks. Yes. Here is the relationship, folks, between your clouds and your brick size. You can make a note of this. Your let's start with the fast cloud. Your fast cloud is equal to your brick size. Your slow cloud is 1.5 times your brick size. Your hawk bars are 75% of your brick size. I went with 4 ticks though because 3 ticks just looked a little bit odd. But that is the relationship, the rough relationship. So if you wanted, I think it was Phil, I don't remember who exactly, when decided to run another Raptor chart in parallel with the trading chart, and he put on a 20 tick Raptor. So change the brick size to 20. And see what that does to your clouds. It just totally messes up your cloud, right? You got no opportunities. You're going to get mostly number 1 signals. I saw we had a couple number 3 signals here, but you're not going to get any signals. So you're looking at your chart like this and it's like, okay, well, that's not right. So then you need to change your clouds. Okay, so the fast cloud is going to be the same as my brick size, so that's 20. My slow cloud is 1.5 times, so that's 30. And my hawk brick is 75%, 3/4, so that's 15. And look at that. Smooths everything out, really nice. You still get the same opportunities. It takes a lot of the noise out of it, as you can see. Well, okay, sorry, most of the noise. Yeah, but this was around FOMC time. But you still get some very decent opportunities. Actually, I kind of like the look of that. All right, so the nice thing about the Raptor, unlike the DTS system that is totally locked, with the Raptor, you can play with it. You can experiment with the settings. Oh yeah, it was Paul. Paul says, I've found that the 20 tick chart really helps with the direction and guidance to keep me in the trade. See, there you go. So like I said, the nice thing about the Raptor is that it's open to experimentation. You can play with it. It's okay, you won't break it. Well, folks, I do think that was the move of the morning, or the move of the day, actually. A very, very strong move. And we're getting a little bit of a reverse happening now. So here's that 2-3-2 opportunity. Note the signal not printing. That's because we've fallen out of the trade parameters, out of the programming parameters, but visually you can see that it is a 2, 3, and a 2. It looks like we're going to get back down here to the hard edge now. I may try to hop on, see if the market will get just a little bit lower. If perhaps it tries to get back down here. But we seem to be quite content around 7,300 for the most part. All right, gang. Good session. We didn't do a whole lot of trading today, but had a chance to review some important fundamentals. If you are going to trade today, I think we can be on the alert here for a little bit of a short-term reverse. The overall trend is up, so you're going to be better off looking for buying opportunities. But I don't think it's out of the question, especially now that we've kind of confirmed the top, big test of the extreme, that the market may try to get a little bit lower here. Don't be surprised if the rest of the session is kind of sideways, kind of bouncing between the high here at around 73.13 and perhaps the 72.90 zone. I could see that developing as a real possibility. Okay, everyone, I will talk to you again tomorrow. We'll see you then.